Hi everyone, make sure to check the timestamps as I go through the macro, high time frame, medium time frame, low time frame and micro scenarios, including potential trading setups. And I also have a new preferred scenario on the micro time frame, which I'll show you in this video. So stay tuned. The bullish scenario on the macro time frame is a 1, 2, 3, 4, 5, with then looking for this wave 5 right now in between 98k and 174k, which basically is the 1.236 and the 1.618 Fibonacci's taken from the high of 3 to the low of 4, which is also the most common target for a wave 5, which is then the white box. Now you can also see I have a yellow box over here, and the yellow box is for me a alternative target, let's say, which sits between the all-time high and the 1.236, basically the 98k area. And I got to the yellow box because this is the 1-to-1 of the low of 1 to the high of 1 to the low of wave 4. And we have the 0.618 over here as well, which is pulled from the low of 1 to the high of 3 to then the low of 4. Toggle on the 0.618 and you get 100 and, well, basically 5k. So when we look at this structure at the moment, what is very good looking is that wave 4 is longer in time compared to wave 2. Wave 2s tend to be deeper and shorter compared to a wave 4, which tends to be not as deep, more shallow and also longer. And in this scenario, that is the case. Wave 2 is shorter and it was deeper compared to its wave 1 as it went all the way to the golden pocket, the 0.618 and the 0.66 during the COVID dump. And wave 4 instead went to the 0.5 Fibonacci from basically the wave 3, and it took longer as well compared to a wave 2. So actually this scenario looks very good. Also the low of 4 had of course the 0.618. It had a high volume peak which can signal a reversal area, just as it did with wave 2 over here. Very high volume at the end of this wave 2 before then a bull run for wave 3. So this scenario is very interesting, but the price targets where we are right now are very, very important for the bullish and the bearish scenario, where with the bullish scenario, this could be a 1, 2, 3, 4, 5, somewhere ending over here around the, let's say, 28 to 34k area. And then during the move down, longs can be led, a very, very clear invalidation over here before wave 4, and then basically trading a very, very big swing trade all the way up to the moon, basically. Then we have the bearish scenario, because of course we always need a, I don't want to say necessarily alternative, but I don't necessarily like the way the wave 4 is looking over here compared to this wave 2, where wave 2 is deep and then also longer compared to this wave 4. So I get this feeling, and I also get questions like, what's your preferred scenario? And actually, like, it might be the bullish one just because of the wave 4. However, we will see, because the area that we're coming across right now is mega important for the bullish and the bearish scenario. Where in the bearish one, we're looking for a W, X, and then eventually a 3 wave in the Y. You can see this area over here around 30k has been support for a while. We never backtested this area till very soon, I guess. And this is a very important, basically, resistance area where we also have the volume range value area low of this range over here, which is the wide line at 28.8k. Here you can see it, high time frame range value area low, and there's a couple of other resistances that I'll show in a second. So this area is very important for the bearish scenario, where then in wave Y we'll be looking for a 3 wave to the downside, with targets basically ranging between like 9k and 12k, also backtesting this area over here that we haven't seen since the bull run in 2020. If we then go to the bullish scenario on the daily time frame, which for me is the high time frame, I'm looking for the following, where in this then wave 4, we have a W, X, Y, X, Z, and then the Z is the end of the very high time frame wave 4, ending at the rare target of a wave Z, the 0.618. Also, wave X did not hit the 0.382, which is actually very rare, as that's usually a minimum target. But hey, it is crypto, it is volatile, you never know what happens, and this is a possibility. So yeah, wave Z hitting the 0.618, which is a valid target, even though it is rare, and we're now moving to the upside. Now, some people have wave 1 over here, wave 2 over here, but what I don't like about it is that wave 2 is so mega short compared to this wave 1. It is even shorter than the 0.618, or sorry, the 0.382 Fib time. So if I show you, over here you can see the yellow line, the 0.382 is 38% in time of this wave 1, and basically wave 2 was even shorter. It's probably around a 0.23% if I'm not mistaken from my memory, which is unusually short. So my preferred scenario would be for wave 1 to still end somewhere over here, backtesting this area of support resistance. And what it would do is, if we would move down from here, people are going to be also very scared because, hey, shit, we backtested a support area, now turning into resistance, prices moving to the downside. Maybe even if we take these lows over here, people are going to say, oh, we changed market structure, we're going to, like, you know, all the way down to the bottom and whatnot. And then in this bullish scenario, that is exactly what you want, because then in the bullish scenario, we would be laddering the longs right inside the most common target area for wave 2, the 0.5 and the 0.786, between 22.2k and basically 18.3k. Stop loss, again, very, very clear in validation, which is the low, and then trading it for the big swing trade all the way to the upside. Of course, the short trade is entering over here. It is at the moment still a bit risky, even though if we look at the volume is declining. So if this is a wave 1, 2, 3, 4, 5, we can see that in this wave 5, we have lower volume than in wave 3, which is exactly what you want to see in a wave 5 compared to a wave 3. So this area is going to be very interesting for a potential short setup. Of course, trade safe, trade with a clear strategy that you have developed and clear trading requirements as well. So tick all the boxes and then enter. The bearish scenario is that this is then the W. We're currently working on the end of X, which is an expanded flat in wave X and A, B, C. Wave B ending perfectly in the target area for an expanded flat wave B, the 1.236 and the 1.38, taken from the low of W to the high of A, and currently working on this fifth wave impulse of this 1, 2, 3, 4, 5, where the long taken over here with the potential trading setup kind of reached a target, in my opinion. Because we reached the most common wave C target. And also over here, once again, you see the FIBs, the 1.236 and the 1.618, which is a wave 5 target taken from the high of 3 to the low of 4. So you could say, hey, we are in the wave 5 most common target area. We are also in the most common wave C target area. So is this the end? Well, and you know, I know we're now going to the downside. Well, I'm not so sure. I would personally like at least to hit the high time frame range value area low level at 28.8k over here. And also just in general, this area is very, very interesting between 28k and 32k basically, because over here you then have the 1.618 as a target for wave 5. You have the 0.382 as a minimum target of the red wave X taken from the all-time high to the low of W. We then also touch the support resistance flip area. So yeah, a couple of confluences that I think are very, very interesting for then a potential short, laddering the short position slowly and steadily with a stop loss somewhere nicely above. Of course, risk management, very important, and then trading it to the downside for either, in this scenario, a wave Y, or of course then a wave 2 before then price to the upside. Wave Y targets at the moment are around the 13 and basically 10k. Also again, backtesting this area that we haven't seen in a very, very, very long time. If we go to the medium time frame, which is the 1 hour chart for me, I'm looking for, in this case, the very bullish scenario, which is even more bullish than the ones I have shown you at the moment. So in this scenario, this over here is the yellow wave 1. So this is wave 1. The yellow wave 2 is already in, even though this is a very short wave 2, as mentioned, shorter than the 0.382. In this scenario, this is 1 and this is 2. We always need alternative scenarios. So what we're looking for then is basically a 1, 2, 1, 2 in a bigger 3. So we have the blue count, which is a 1, a 2, and then eventually further upside in a 3, 4, 5. What I do not like, and that's why it's an alternative, what I do not like about this scenario is that the second wave over here in blue did actually just miss out on hitting the 0.382, which is usually a minimum target for a wave 2. So it didn't hit it. It literally missed it by, I don't know, a couple of tens of dollars, which is something I don't like in this scenario. But then again, it is a 1, 2, and then we're looking for a white 1, then a white 2, and eventually movement to the upside with, once again, basically the end of this white 1 ending somewhere in the area that is so interesting in general for a potential short setup. The invalidation is very, very clear, 23.9k, but I have to say this is an alternative scenario at the moment. The bearish scenario over here is basically bearish and bullish, because I put the bearish and bullish scenarios on the higher time frame both in one chart, because here you see the red X of the WXY, expecting much lower prices, but I also have the high of wave 1 and then wave 2 for then much higher prices. The thing is, the reason I did it is that trading wise, it's the exact same trade. It's both a short around this area for a trade to the downside. The only difference is how long you can keep this trade, because with a wave 2 we're looking to, well, end somewhere around the golden pocket area or the 786 area, maybe taking these lows as well. But with a wave Y we're looking for much lower prices for a longer swing trade. Of course it takes many days to get down there, so based on the price action that we eventually get to the downside, one can change the potential trading idea to here down to even further, or indeed closing it over here. So yeah, in this scenario we have both of these. So we have wave 1 finishing, then a 2, which is a 3-wave structure then, and then eventually more upside, or wave X is finished and we go for much deeper prices in a 3-wave structure. But then again, the trading setup is basically the same. Entering those shorts, have a very safe stop loss somewhere above, trading it to the downside. I also wrote the volume of the impulse, which I think is important on this time frame. As you can see, this latest impulse over here, which then is the potential wave 5 in both these scenarios for X and for 1. So over here you can see a wave 5 also consists of 5 waves in the end, and a 1, 2, 3, 4, 5 one could be looking for currently in the area as well, again for a wave 5 ranging. And then here you see very high volume and then a potential wave 3, slower volume, lower volume in a wave 4. And then now over here you can see that the volume compared to this high, so we are making a higher high on the chart in price, but volume is slowing down significantly. You can also see compared to here, lower volume, this high, lower volume. Actually this high over here had lower volume as well, and then we had a little bit of a bearish spike, bearish volume spike over there. And if we would take the low once again, then it is quite likely we might actually do it with even lower volume. So yeah, it's going to be quite interesting. Volume is definitely dying. The change, also the chart over here is more like almost going flat at the moment. It started impulsively and now it's going almost sideways due to the range. Of course, you could think of a wave 4, but in my opinion, it's a bit more likely we're very close to the end of this impulsive structure, which also has great confluence then with this resistance area for, once again, a potential short trade. Then on the lower time frame, this is actually the same as the medium. So I should actually remove this one, I guess. It's just a 1, 2, and then eventually, so a 1, 2 in green, and then eventually another 1, 2 in blue for then more upside. And then over here you have the white 1, 2, 3, 4, 5. But then again, it's a short over here for then a potential blue wave 2, and then longing for this wave 2 to the upside. But this is once again a alternative scenario. And then we have the bearish scenario where we are in the final stages of this wave 5 or 5, so a 1, 2, 3, 4, and then the final 5th wave for then the X or the high time frame wave 1, where this is then a 1, 2, 3, 4, working on the 5 very soon, again a short setup. Then we go to the micro scenarios, which actually I think are more interesting to watch anyway compared to the others, where in my opinion this diagonal became an alternative scenario. So in this scenario, what we're looking at is the high of 3, low of 4, and then the diagonal. Like diagonals are actually quite complex because you have 3, 3, 3, 3, 3 diagonals, basically each wave being a 3-wave structure, or you have the 5, 3, 5, 3, 5 scenarios, and it then also depends if it's leading or a leading or an ending diagonal. Some say everything like both of these, the 5, 3, 5s and the 3, 3, 3s, are possible at both places, the ending and leading. Others say you can only have a certain count in a ending or a leading. Very complex, but at the moment what this looks like is this then, for now, either it's a 3, I don't really care because it doesn't matter for the count, but then they move up in a 1, then we have a 2, a 3, which definitely looks impulsive, then a 3 wave 4, and then we're looking for a wave 5 to finish over here. Now what I don't like about this scenario at the moment is that first of all wave 4 went very deep to a very rare target, the 786, and also if wave 5 breaks the 1-to-1, which currently sits at 28.7k, we are not reaching the high time frame range value area low, because we would then take these highs, and after taking these highs in the 886 area, move to the downside. And that is something I actually don't like to see, because I would really like price to hit this area. So therefore this is now an alternative scenario where my preferred scenario might actually be the following then, where this is wave 3, wave 4. The 1.618 over here, you probably know the color and the number by now, taken from the high of 3 to the low of 4, hit perfectly for a potential end of a wave 5, which is then this impulse in a 1, 2, 3, 4, 5 over here, and currently working on an expanded flat. And then the expanded flat wave B would hit the resistance area for then an impulsive move to the downside, and currently a 3-wave zigzag in A. And I want to highlight for the Elliott wavers here watching the channel that in this scenario, wave A hit the rare target for a zigzag. Where is it? There we go. So the 1.618 that you see on my chart right now, it might actually be a little bit dark. So let me lighten this one up to white. You can see this can be a zigzag, an ABC over here, hitting the rare target for a zigzag, which is the 1.618 perfectly, because we only wicked below, but on the 15-minute did not close any candle below there. Then we have another, basically a wave A, which then is an impulsive structure. A corrective wave B, very likely to be some sort of a WXY before now getting then another impulsive structure to the upside for wave C. What I also like about this is that if this is wave A and we take it to the low of wave B and we toggle on the, where is it, zigzag, you can now see that the 1-to-1 of this wave A for a wave C is exactly at the wave B most common target area of the 1.236 and the 1.38, also in line with the high time frame range value area low. Like the 1-to-1 target for this wave C in confluence with the target of a wave B, in confluence with the high time frame range, with the support resistance area. Yeah, very, very nice, I think. So currently working then on potentially this wave C. I think it's important to note we still have these bullish divergences that did not yet play out. What you can see is over here we create a higher low and then again a higher low. So the confluence between these lows over here, a higher low and then a lower low on the CVD already played out because we took the high. But then when price came down in this potential B wave, you can see that the low over here and this low again created lower lows on the CVD, but higher lows in price. And basically what it means is that there's more selling in these lows than there's over here, but it's being absorbed, which therefore makes it more likely for price to push to the upside. And it has played out theoretically if we then take the high of A. So yeah, this would be such a nice scenario in my opinion. And then after hitting this area, maybe probably very likely wicking above the area, but not preferably closing candles above the 1.38, and then moving to the downside impulsively in a wave C. So then we have a very nice A, B, and then an impulsive C to the downside for the first structure, which then also is a corrective structure. So it's not an impulse to the downside, it's a first corrective structure to the downside, which I think is very important for the higher time frame counts as well. And then lastly, a little bit of news. The chat is, or the Discord is open. We are up and running, 500 subs. Well, we're already far above 500 now, but since 7 a.m. this morning when I reached 508, we passed the 500 number. I opened the Discord, as many people have been asking me about the Discord. So yeah, guys, if you're interested, join the Discord. We're with a great bunch of people over here as well. And yeah, I got some interesting channels for you guys to check out, and there will be a lot to share as well. So I hope this video was helpful or valuable to you. I'd like to thank you for watching and of course also subscribing, and I will see you at my next video at 7 p.m. Central East European Time. Thanks once again. See you at the next one. Bye bye.